Welcome to the Opportunity Podcast, where entrepreneurs come to learn from real buyers, sellers, and industry experts on the lesser-known growth opportunities to build their online business empires. We'll uncover tactics veteran online business entrepreneurs have used to build, buy, flip, and sell their way towards personal wealth. Sit back, grab a coffee, and get ready to uncover hidden growth secrets. The Opportunity Podcast starts now.
Hey everyone, welcome back to the Opportunity Podcast, your go-to resource for hitting growth opportunities throughout online business. We're your hosts. I'm Brandon.
And I'm Sarah, and thanks for joining us for our latest episode. Today we'll be speaking with Jayrd Krause, the founder and CEO of buyingonlinebusinesses.com. Jayrd explains his journey from traditional investments to teaching people how to build online businesses as a steady source of passive income.
Yeah, that's right. Jayrd explains his mindset behind why he now prefers growing online businesses over trading stocks, real estate, or even crypto because of the greater potential upside you have over traditional investment vehicles. He explains how he focuses less on teaching tactical advice and rather teaches his students principles and strategies which stay evergreen. He explains why it is important to build an addressable audience and how to target that audience and speak to them well, along with other great timeless advice in this episode. But we don't want to give away too much just yet, so let's dig into the interview and see what Jayrd has to share. And then at the end of the episode, we'll cover some questions and answers that highlight the growth opportunities we've learned about today. So let's get started. Hey everyone, welcome back to the Opportunity Podcast. So today we have a really special guest on the call with us today. It's Jayrd Krause, and he is an owner, investor in multiple online businesses. So welcome to the show, Jayrd, and how are you doing today?
Thank you so much for having me. I'm doing really good, thank you. And you guys?
Yeah, doing fantastic here in Mexico and Sayulita. I know before the call started, we were talking about, some interesting sounds and roosters that have been waking me up in the morning. But yeah, it's been going good so far. Sarah, where is it that you're calling from?
So I'm calling in from Zagreb, Croatia. Actually headed down to Split tomorrow and pretty pumped about it. Less roosters, but still pretty cool. Should be some good coastline that I'm catching up with soon.
Yeah, it's really great to hear as well, too. Yeah, so thanks for jumping on the call with us today, Jayrd. It's really nice to have you on the podcast and to talk a little bit about your experience. But for our listeners who might not be familiar with your story and kind of your background, why don't you give us a little bit of background or update on your entrepreneurial journey and what that looks like today?
Yeah, so I guess I should probably make this quite a condensed version because I remember doing a podcast with, I'm pretty sure with Justin on the Empire Flippers podcast, and which was mostly my longer story. So I'll condense it down. I used to be a plumber working in Australia, working like big hours. I had a big commute to work. I hated it. So I went and did what you guys are doing and traveled. So I'd work 6 months and then I'd go travel for 6 months or a year, come back, save up and do that repetitively. And on one of my trips, I realized I can't go back to this lifestyle I created. I just didn't like it. I had created a toxic weekend. Every single weekend was like a toxic weekend for me. It was not a healthy weekend. Let's just say that. And so I was in a bad space and I realized I can't go back to this lifestyle I created that I sort of just fell into and was just pushed into by like the funnel of society, basically. And one of my trips, I was living in Egypt and I realized I need to get out of this life. I need to not have a job. I want to be able to travel full time. So that's when I started a few small website businesses. Like Travel Blog was my first one. And then I started a drop shipping store and really struggled to kick them off the ground and make some money. And then I realized, I think I came across a stat. Yeah, it was a stat that was 90% of all startups fail. And I thought, well, if 90% of all startups fail and I know how to run these businesses, why don't I just buy one? It's past that 90% failure rate. Then I taught myself how to buy a business, small little website business, and it went really well. And I was just surprised because I'd had investing in the stock market and doing some other things with my money. And it went quite well. So then I bought another one and then I bought another one. And then people sort of started saying, hey, like, how can you travel and not need to work? And as you guys know, when you meet a lot of people on your travels, you exchange your stories. And then a lot of people like, dude, you need to teach me this stuff. Can you help me sort of like learn how you're doing this? And that's where I design this business of teaching people how to buy online businesses. But that's the short version.
I like how you put that there when you're talking about, toxic weekends. I don't know if you have the phrase in Australia where you call it like Sunday scaries. I quite like that phrase. The fear of having to start that week again. And I feel like that's probably one of the most motivating places to be in. I know I've been there before and I've seen a lot of people go through it. That kind of, I hit that weekend and hitting into the week, and this is my make it break it point. Like something's got to change. So that's really powerful that you actually answered that call. Obviously, we know too many people in this world go through life without answering that call and just continue to have the Sunday scaries or toxic weekend, as you're calling it. Clearly you've come a long way. You started making online business work for you. And you're now at the point where you've been working deeply in the space for years and kind of going through your body of work. One thing in particular really stood out to me, and I was really excited to get into this topic, is I think we're all kind of shared evangelists for how buying businesses can be a great investment. And the way that you put it on your site is like you talked about how buying an online business can beat property, stocks, Forex, and crypto. I loved that. And I was wondering if you could set that up and tell me, why do you think that is?
Yeah, look, each of them are very different to one another. I kind of like to look at physical property investing being similar to investing in websites, whereas you can buy a digital property and you can renovate it and then you can flip it, or you can hold on to it and you can make decent money from a physical property, but more so a digital property. Why it beats physical property is because the cash flow is so much higher and so much more positive than physical property. Now, that said, there's risks with an online business. That's, environmental risks and changes to policies and governments and stuff like that in physical property and online businesses too. But what happens with digital property is it changes very, very quickly, which means you can make a lot of money really quickly off the back of that. And that's why I believe it's, you can do exceedingly well. Like if somebody's goal is to exit the 9 to 5 or not have to do the regular day job or have those toxic weekends and, the scary Sundays, you can do that a lot quicker with digital property versus investing in physical property. Especially if you've got a job, you get to a certain position where your lending capacity, you can't get past that, a couple of properties with your lending capacity from one job. So that's why it can beat physical property. Now, I believe buying an online business far outweighs stocks, Forex, and crypto in the sense that some people don't really understand. Most people turn to the internet to make money online, and they can see that you can start an online business. And they can see that, all right, cool. If I want to make money online, I can start an online business, or I can, be a day trader in Forex, stocks, or crypto. There's a huge difference between these two. Like I said, most people don't really realize that unless they've been investing for many, many years and sit down and contemplate the risks that are involved and the opportunities that are involved with each. Now, the risks with stocks, Forex, and crypto is they can move very, very fast. And that means you can see the stocks, Forex, and crypto go up hugely and then come down hugely. And you can miss that and you can lose a lot of money really, really quickly. And it moves faster than digital businesses, which is scary. And then what most people don't see is that when you're investing in stocks, Forex, and crypto, you're investing in something that you cannot control. Now, this is huge. Like most risk is minimized by the level of control you have over your income stream or whatever investment it is that you're investing in. Now, with stocks, Forex, and crypto, you don't have any control, meaning that you are buying, say, a stock or a cryptocurrency and you're waiting for the market to do its thing. And you can't control how the market moves. And also, the control over the stock is you can't add any value to that stock. You can't make yourself earn more money through that investment. Whereas when you buy an online business or a digital property, is you can purchase it and you own that, right? So if something's going bad with the business, right, or an algorithm update happens or whatever, or, your site's just not ranking for a few keywords, or if it's an e-commerce business, your marketing campaigns aren't doing as well as they were, you can change that and you can add more value to the business. You can buy an undervalued business and add massive value to it and flip it. So you have ownership over that business and you can pull out more income because you can grow that investment, whereas you can't with stocks, Forex, and crypto, that is, because you don't have control. And without control, there's huge risks. So that's why I believe that buying online business can beat many of those different formats or traditional types of investments.
Yeah, those are all really great reasons. It just kind of great rationale behind it. I'd say it's so easy to get stuck on the potential risks. And I think part of it, and you're kind of hinting to it there, is just like a lack of, let's say, market acceptance or popularity. I mean, crypto is one of your examples, right? Where that would have almost been, I can't really put a number on, say, how many years ago, but, at first when that emerged, it was like, no way, I would never put my money in this. I would invest in this. This is way too risky. And then all of a sudden you get to where we are now and you've got meme currencies becoming like a thing. So anything can happen. But I think that's where we're kind of missing. Like, we're not quite there yet in the online business sphere. It's like too many people are looking at it, say, the way they would have looked at it, crypto, 5-6 years ago. It's just that lack of acceptance. But as you pointed it out, there's actually so much more degree of control and it isn't as risky as some of these other things that we're investing in comfortably, mainly because they're popular, as you put it.
Well, there's a lot of FOMO behind it, especially in the crypto world. And I think more than anything, society depends on how much time they spend on social media. But a lot of people suffer from anxiety and fear of missing out or fear of getting left behind. And that hugely plays a role in crypto, where friends are like, I made this much money. And they always talk about the good. Nobody's going to share how they lost, a lot of money or most of their wealth on crypto, because that hurts to share. And so we mostly hear about the good, and people share the best parts of their life on the internet. And I think it's just dangerous that people set such a high expectations for themselves and buy into the perception that they're missing out if they don't get on the same train. And I kind of like to look at things differently. I don't look for opportunity when I invest, because I think that's scary, because there's opportunity in everything. But what I look for is the least amount of risk when I invest. And this is what I teach my clients and people that are in my membership, is that, look, you can find something that's got a lot of opportunity, but that can have a lot of risk that you're not seeing because you're blinded by the opportunity, which is something that happens to all first-time investors. We invest, especially in an online business for our first time, with a lot of emotions. And we build up this lifestyle, this ideology of how our life's going to be like if we own that online business, and how much money we're going to make and how quickly we can get out of our job. And we quickly dismiss the risk that can be involved and build upon the good parts that we see, and then build upon the opportunity, and we build that vision for ourselves. And I was a part of that. I did that in my first online business too, and even my second. And it's something that I had to learn and acquire that viewpoint over time. But this is what happens with investing in crypto as well, is people will buy into like the opportunity that don't really look at the risk. So I think if you can buy something with minimal amount of risk, because there's opportunity everywhere, it's better to buy something that with minimal amount of risk and find the opportunity within that.
I'm at risk of, maybe making you repeat some of what you just said, but I think you're kind of leading into my next question, and maybe we can just get a bit more granular. I think you're hinting at this, but, why are most sites that buyers look for not actually great investments? And I think that's the differentiation of, opportunity like you were talking about, but give me your take on that.
Well, it's a general one, but let's get specific as well, because this is going to help people who are listening understand why an investment may not be great for themselves, because it can be individualized as well. Now, the broad and general version was the answer that I mentioned before, what I was talking about before, is that it may not be a great investment for somebody because they build up this picture or this image or this vision of what their life's going to look like if they were to own this business, and become hyper-focused on that. And I think it's great to have a vision, but to also be open to the real risks that are involved with it. And that's one main reason, and a general reason that can happen to most of us when we're looking at buying our first online business. And that's one of the big reasons why it may not actually be a great investment. But if we become specific about each individual, buyers may think, all right, an e-commerce business, like they see Amazon businesses blowing up and the multiples are going up, and they're like, wow, I could own if I own an Amazon business or an e-commerce business. I'm selling physical product. It's a good business model. And they have this perception that they want to go away and purchase that business. That may be a terrible investment for that individual if they don't know how to do digital marketing. They don't know how to maintain the digital marketing that's being done with it and or get a better result than what's currently being produced by the current owner of that business. And maybe they're a great journalist and maybe they're a great writer. So one investment may not actually be good for their, personal skill set or what they are hungry to learn. I mean, you can buy a business that is an e-commerce business and know nothing about digital marketing, but be super excited and super driven to learn a lot about digital marketing to become really top notch at it. And then I think, yeah, that could be a good investment if that person is seriously dedicated to it or they're willing to hire somebody that can help with that. So the general one is that most people dismiss the risks because they get hyper-focused on the vision. That's a danger to everybody on their first and even second site. And then why another investment like a website may not be good for an individual is because they haven't really played out how their skills or their knowledge or their energy in terms of excitement and willingness and drive to learn a certain skill will affect the growth and the trajectory of the business if they were to purchase that type of business model that may not suit them. Does that make sense?
Yeah, absolutely. It's, really honing in on your specific core skill set and making sure that you understand like these types of investments are going to take a little bit of effort, a little bit of work on the back end, but your opportunity in growing or scaling your investment to receive return sooner is far out exceeds, most other traditional investments that, have been speaking about. So when looking for this great opportunity, when you're searching on Marketplace and you're looking for that next acquisition, what are your rules for due diligence that every buyer should maybe even start to implement themselves?
So there's so many things that to do with due diligence. And my main rule is to just understand how to do due diligence well. Understand how to become a investigator, a mad investigator, and ask as many questions as you can and pick apart businesses and really dissect them and understand them. And that's probably one of the main rules, is to just really put your Inspector Gadget hat on and dissect businesses to a point that you understand them, and do this often. So that's the second part to this is do it over and over and over and over again, because the more you do it, the better you're going to become. And then the better investor you become, the better businesses you can see and the better investment you end up making.
Would you say that focusing on what your main skill set is with a business, say you're really great at dropshipping, but you're not so great at e-commerce, would you say focusing on only a dropshipping business is key? Or as you had mentioned, because you can take courses and utilize resources to learn that, if you put that dedication in, do you think that's still okay for first-time buyers to maybe experiment with?
Do you mean if they don't know something about a type of business, is to move forward with it if they're willing to learn? Is that what you mean?
Yeah, like say they come from a dropshipping background and it has more of an e-commerce side of the business, or you see great growth potential with adding an e-commerce model to the business. Do you think that's worth someone trying out for their first time, or should they only stick to what their core skill set is?
Well, if they're going to buy a dropshipping business and they can see that you can add value to it by selling the physical products yourself through self-product distribution or through a 3PL, third-party distributor, first I would say is when you purchase the business, the dropshipping business, really make sure that part of the business, the dropshipping, the order fulfillment, customer service, and the marketing is systemized really, really well, to a point where you can free up your time to then experiment. Like, it's all an experiment with life and business. We're all just putting things out there in the world and trying to get feedback of what's right for us and what's not right for us. And it's the same with online businesses. So I think once you've got freed up some time because you've systemized things within your business or within your life, then you can experiment trying other things that may work. And that's what I would say do first, is make sure you don't just try and put too much on your plate because you see, all right, this business has this opportunity of me adding this to the business. Then what you can do is you can destroy the golden goose that's always been working for that business. It's like if somebody was to buy a business within my membership and say, join your mastermind, I want you to help me scale it. And they say, look, Jayrd, I just bought an e-commerce business and I want to scale it and I just want to add a lot more products to it. I'd say that's crazy and I'm not going to work with you if you do that, because you can kill the golden goose by chasing all these shiny object syndromes and trying to add value where you already have the golden goose of a few products that are selling really, really well. And I'd say to them, they need to focus on those main products, the top 2 to 3, discard the rest, and really get your marketing and your systems around that to make sure that you're selling a boatload of those, because that's what the market wants. And then you can come in, do experimentation with value add opportunity. Does that make sense?
Yeah, we had someone on recently who kind of echoed the same sentiment where they said, don't scale for scaling's sake. Don't scale because that's a thing that you think you need to do. Like you said, it's very easy to destroy your golden goose egg and, basically ruin the good thing that you have going. And I bet you probably see this often because you're working with a lot of new buyers. It's like people almost have, let's say, sticker shock from the investment they've just made. And they're like, right, well, I just spent a lot of money. I better get it back fast. How do I get it back fast? I start throwing out scaling opportunities. And that's how this thing is going to make me my money. That's how I'm going to make great ROI. I'm going to make it way faster than I anticipated. I'm sure that you probably have to do a little bit of coaxing and helping a little bit with mindset on that. I'd imagine that comes through quite a bit.
Yeah, for sure. Once we buy a business and we start making money and we're running, then we're like, let's just start sprinting. And sometimes when we go from a run to a sprint, we can injure ourselves. And in business, it's a long-term game, and we shouldn't try and do things overnight because that's when things break.
100%. It's all really great advice. Switching gears, we're getting past that sort of initial due diligence and we're getting to negotiations process. We know that that's a pretty big chapter when you're trying to get an acquisition done. When it comes to negotiations, what would you say are the secret wins for a buyer?
This is a great question. I am not a big believer in full tactical maneuvers. Some people may have the perception that it's really good to put out a low ball off and then work your way up to something and have a capped off price and play games. I think a lot of people like to play psychological games with sellers and brokers, and you probably see this stuff and you're probably sick of it yourselves. And I think you guys may be better at answering this than me. But what I believe, I guess it could be a secret because most people don't think about it, but a huge win is, first of all, being great at due diligence, understanding the type of business you want to buy. And the better you become at doing due diligence and understanding the value, what an actual website business is worth. So let's stick with a content website that may be just affiliate or a combo affiliate and ads. So they're two different types of businesses, I believe, and worth different multiples and can be valued very differently in just themselves within content sites. And I believe if you're looking for a particular type of business, the hard work is done in the prep, right, for a negotiation. The hard work is done where you need to really look at so many of those particular types of businesses to a point that you know how much they're actually worth. You know how much you should spend on one of those businesses. You know the value of it so well, probably better than the seller. And then when you do that, you can put forward your offer. And I say to people, put forward one offer and say, look, I've done a lot of due diligence. I've looked at a lot of businesses and this is how much your business is worth. If you want it, great. If not, that's okay. Because when you make one offer, you're not worried about somebody bidding higher if you know the value of the business. Then you know somebody's going to overpay. And you're happy with putting one offer in and not playing games. And this is what I tell people is when you're going to buy a business or anything, just say, look, I know how much this is worth. I'm going to put one offer in. I'm not playing games. I'm not here to take counter offers. If you like the offer, great. If you don't, that's totally fine. And what most people do is they'll, some sellers and some brokers play games. And I don't like that. I'm not here to play games. I'm here to buy a business. And I teach my clients the same thing, because there can be games where people will rig it so they can make more money for their business than it's worth. And I think that can work, but I think it's fair to sell a business for a fair price. And that's what I believe is that the secret to a negotiation is all the prep work in knowing how valuable this is. And that's what I believe is putting in one offer and sticking with it.
Yeah, I like that take. I mean, absolutely. We can level with you there. It certainly aren't about playing games. I think part of our ethos is really more on the honesty and transparency side. And we want to make sure people get their deals done, not being sort of drug out, and all of a sudden nobody really knows what's what and really what is it you're even selling anymore. It's not really how we do things.
Yeah, I mean, this is how I get my clients can win deals because that's how my clients win deals. That's the real secret, is because they know how to do due diligence and they know the value of a business before they even put an offer in. And that really buys a lot of respect from a seller, because the seller can go, look, I've got a higher offer and would you want to match it? I'd rather sell it to you because you know what you're doing, you know what you're talking about, but can you match this offer? And when my clients say no, they're happy to not match that offer because they know they're trying to sell the business for more than it's worth. And a lot of the time, the sellers will come back and say, okay, I'll sell it to you for the price that you offered.
Well, yeah, and it can't be understated, what you said there. It's like proving that you know what you're talking about. Because ultimately, we talk about this a lot on the podcast or just kind of in our content in general is, the seller still gets to choose who they want to buy the business. You want it to ideally go to the hands of someone who's confident, who gets it. So if you are the type of buyer that comes in, proves you know what you're talking about, you understand, well, the business's value is actually really here because X, Y, Z isn't quite right. Therefore, those are my opportunities. However, those are also my risks, so on and so forth. And then that makes you go, you know what, that person really is going to take all my hard work and take it to the next step. So isn't always necessarily highest offer, like you say. It is that level of trust.
Of course. And that what you said there is beautiful. Like the explanation and how you word it when you put your offer in is important, because if it's a secret win that we're talking about here, one of these secret wins is, I look at it as in buying respect, right? Buying respect from the seller with your valuation and how you present that. That can buy huge respect to a point where the seller goes, wow, like I could take maybe, depending on how the business is, how big the business, but they could take 1% less or 2% less of the, than what a higher bidder may be presenting in an offer to sell to somebody that's like, wow, okay, like I've just built this business up over 3 or 4 years and it's my baby. Do I want to take more money with somebody that's going to fumble around and maybe break it? Or I want to take a little bit less with somebody that has bought my respect because they know what they're talking about and they can carry this on and they're confident in them. So you're buying confidence, you're buying respect throughout a negotiation if you look at it like that.
Yeah, 100%. I do think sometimes it's the intangibles that are often, it's easy to undervalue those, but really they play almost significance beyond just numbers.
Yeah, it's all the little things. Yeah, you're spot on.
Absolutely. Yeah. We're talking about value proposition here. I guess getting a little bit more on the tangible side and the what's next. When we're talking about getting a new business under your wing, this is your new baby, and you've got just like a plethora of directions you could take with this business. It's probably really overwhelming, I'm sure, when you're coaching buyers and they almost don't even know, oh my gosh, where do I go first? What would you say let's narrow it down to 3, because I know it's easy to talk about everything, but what are the 3 best growth strategies for newly acquired businesses?
Okay, this is good. And can be a tough one because it's general. It's not specific to any one business model, but that's fine. I'm happy to give general advice around it. And I would say the first thing that you should do is do nothing and watch and wait and see and this is super hard to do. I'm telling you, it's really hard to do when you're excited and you're making money and like, oh my God, I can just make more money because I can do these different growth acquisition strategies. The power of doing nothing is so valuable because what happens is you learn business and you learn what's not working in the business. You learn how it operates. Now, the worst thing you could do is to jump into a business and change everything and destroy it. So I'm a big believer in the first part to growing a business is knowing a business. And once you truly know it, and that just comes from time in the business, then you can start making smarter decisions, not just making decisions for the sake of making decisions to try and get scale and growth. In business and in life, like I said before, is we're throwing things out there, we're trying and we're experimenting and we're seeing what's going to work and what's not working. And we get data, we get feedback. When a business, which is a system, is running, you can do nothing with it and get a lot of data and feedback of what's working well and what's not working well. So the second step to doing nothing is analyzing the feedback and the data and making decisions based off that. And I would say do less of what's not working well and just do more of what is working well. And I'll give people an example here. So say there's an e-commerce business that has two different sales funnels. One is wholesale, they're selling their product for wholesale, right? And let's just say we're talking about guitars, and they buy guitars very cheap from a manufacturer and they can sell them retail on their Shopify store. And they also have people who are ordering wholesale, but they're ordering 50 at a time. And they make a little bit less profit on each individual guitar, but they make more money through selling a lot of them to guitar shops. And so some people may look at the business and go, okay, cool, the digital marketing that we're using for the business, that's what 90% of the time is spent on as the owner, and doing Facebook and Google ads or Instagram ads or whatever it is. And about 40, 50, let's just say 30% of the sales are coming from that, but 90% of the effort is going towards those types of sales. And then on the other hand, you have guitar shops that are calling in and saying, hey, we want to buy a big bunch of guitars because they're great guitars and we can get a good price. Once you understand, like some people might come into the business and go, I just need to spend more money and more time nutting out the retail sales because, we're not making enough retail sales. But what they may be not seeing is that like you could do far less work and spend far less money and just go all in on selling the 70%. You get 70% of the sales from wholesale. Why would you not just get a list of wholesalers? A list of guitar shops in a certain area, call them up and ask. Less time, probably don't need to have ad spend, but you can scale the business that way. And you could hire somebody to do the calls and everything like that. So we have perceptions, and I've been blinded to it myself before, but I'm a strong believer in just sitting there, watching the business, get feedback, cut out what's not working so well, that's taking up a lot of time that you're trying to make work really well, and then just lean into what's working well, what's working with less energy and less effort, and getting a better result. It's the Pareto principle, right? The 80-20, we've all heard of it. So that's what I would say is the best way to grow a business, for growth strategies.
Yeah, really solid advice. It's taking a step back and looking at the business model to make sure that your revenue sources are diversified to a point where you're not having to spend more money to gain more money. And, having diversified traffic sources as well as revenue sources is very important when it comes to these types of businesses, because you don't want to put all of your eggs in one basket, I guess you could say. And, through your experience, Jayrd, I'm sure you've probably, acquired and exited multiple businesses at this point, but I'm interested to learn what has been your most impressive ROI from an acquisition, and how did that come about, or walk us through what that whole deal consisted of.
This is a funny one, and I have to be totally honest. It's just all luck, this one. It was my second business I purchased, and I bought it, and it was basically a retail business and a brick and mortar. They were doing most of their sales through brick and mortar, and they changed it to all online sales, and got rid of the store, and they just didn't want to continue running it. They were accountants, and what ended up happening is, like, I purchased it within 7 months. I've achieved 100% return on my investment. And yeah, it was crazy. I would like to say I had a hand in that, maybe a little bit, but yeah, a lot of it was luck. I was just in the right place at the right time and bought the right business. It was a business that didn't sell on a marketplace, and then the seller could really see how interested I was, and we came to an agreement, and I bought it off market at a pretty decent price, which also helped me get a great ROI very quickly. Yeah, and also like a lot of returning customers played into that as well, because it was a great product. I wish I could just give people a beautiful growth strategy, but it was a lot of luck there.
Well, they say luck is when you combine opportunity and preparation. So it was the right time for you at the right place and moment in time, and you were able to take full advantage of it. And that's a really awesome story to hear, that you're able to gain that full ROI in 7 months.
Yeah, luck is a cool one. I never used to believe in luck until I read this book by Roger Hamilton. It's called Your Life, Your Legacy. And he says luck stands for location, understanding, connections, and knowledge. And if you are in the right place, location, you understand the investments to help make it work, or the connections to purchase that type of business, and the knowledge to at least run it, you can be in the right place at the right time, and luck can play a part of that. And I just think it was a really good analogy of luck.
Yeah, that's amazing. And I'm sure our listeners will gain some value in researching that book as well. And we'll make sure that we leave it in the keynotes here in this episode as well for you too. And kind of on that same vein, we're kind of talking about, I guess, the opportunity that online business offers and sort of the mindset that you should have going into this. Whether you're a first time, second time, third time business buyer, it's always great to have a positive mindset and to know exactly what it is that you are hoping to achieve in the deal. So I'm curious, do you have any kind of mindset advice for buyers who are maybe just first starting out, or how they might be able to manage an asset that they just recently acquired?
Yeah, that's an awesome question. I would say in terms of mindset is, instead of having your mind set on something, is one tip would be to be able to change your paradigm and be able to change your belief system in things, especially because if you may have the perception that one business model is right for you. Like I said before, somebody might be like, an e-commerce business is the one I need. Be open to changing your paradigm and changing your belief system to find something that may suit you better, whether it be a different type of business, or when you have purchased a business, a different type of acquisition strategy. For example, maybe you're trying really, really hard to sell your product for an e-commerce business on Facebook, and you're just not getting the results you're hoping for. Be open to going to Google and experimenting with that and changing your paradigm. So not having your mind actually set on one particular thing that you have to drive home ends up destroying your investment purchasing decision or your business. So I would say that. The second thing that I would say is that don't rush. I will say it's all about the long term, and I have to agree. What you learn in one business may not get you the ROI in that business straight away, but it may in the second or third, whether that's an investment decision or a growth strategy as well. And I would not get into business for the short term. I feel that a lot of people come to our space trying to replace their income at the drop of a hat, or within 12 months or 2 years. It's pretty hard. And those people that do it usually have a business, like years of business experience prior coming to this space, and a lot of capital. So for the average investor like I was, I would say if you're going to get into this game of business, or even if you in life as well, I think it's a long term, like don't rush things, enjoy the process, and time is actually on your side through compounding, through everything that you learn. And it's not just compounding with like compounding effect with money in your bank account and that sort of stuff, but the compounding and the second and third order consequences of you learning how to buy an online business, all the due diligence that you do, all the things that you learn through that due diligence about multiple different business models and the compounding effect of that in 5 years, 10 years time, that education, that knowledge is going to help you hugely. And if you're going to get into this game, do it for the long term, not to try and make it happen overnight, because chances are it's not going to happen overnight.
All excellent advice. I guess when we're talking about like the timing of things, like you're saying, like things just can't always happen overnight. How do you help people kind of prepare for the future, and in a future that's certainly no one can see what's coming? How do you help people invest in online businesses in a way that's sustainable and future-proof and able to mitigate risk?
It's a great question as well. Nothing's ever set and forget. And I don't know if anything's ever always future-proof, because everything can change, like everything. Google may not be the same and probably won't be the same in 20 years' time. I would say in an evergreen way to invest and grow businesses, I teach them evergreen strategies, teach them to buy evergreen businesses, I like to teach not tactical things. A lot of people are out there with courses and info products teaching very tactical advice. And the reason I don't like tactics is because tactics can change. For example, if somebody's teaching somebody how to do Facebook ads, the education they learn is not going to be able to be applied in 5 years' time, because the Facebook algorithm and the Facebook platform is going to change. So those tactics aren't going to work anymore. So what I like to teach tools and strategies, which are evergreen. And for example, a marketing principle would be build an audience, right? Build an audience. How do you build an audience? Target people that are interested in the thing that you have to sell, right? And that's very broad and very basic and very generic. But if you look at it from a tactic of like, what do I change on a Facebook ad to get better performance? Or if you lean into a principle that's an evergreen strategy that can be used on multiple platforms of like how to target an audience really, really well and how to speak to that audience. And then you can do it on Facebook, you can do it on Google, you can do it in 5 years' time. So what I like to do when I teach people to invest in an online business and grow businesses, I like to teach principles and strategies that are evergreen, not tactical.
Switching gears here, a lot about market trends and definitely what's happening on the sell side. We have a lot of conversation on our end about how this has been a seller's market, but I'm curious, what is your take? So what do you think the market for buying looks like, and what insight would you give buyers looking to buy now or in the near future?
The seller's market is very healthy at the moment. Mm-hmm. Haven't we seen that? If you want to sell a business, now's the time to do it. Depending on when this is going live and depending on when you're listening to this, we're talking about in mid-2021, sort of end of May, and even throughout the start of 2021, it's been very healthy to sell a business and get good multiples. In terms of buying a business, there's still great opportunities, and there always is going to be great opportunities. It's just finding those great opportunities is important. And I could always see this happening. When I first started buying businesses many years ago, the multiple was like far lower than it is now. And it was always going to be the case where multiples do rise, because the opportunity of being able to go out and buy yourself an income stream with a proven system that's working every single month, it's insane. It's amazing. And, you can't do that in, stocks, Forex and crypto or property. You can't buy yourself an income straight up. So I believe it's still a great time to buy and it's a great time to sell. I think we have a very healthy industry at the moment and a lot's happening. And the more attention that comes to it, hopefully the better it gets.
Yeah, absolutely. Yeah, I couldn't have said it any better. I mean, really now is like some of the best time we've seen on our marketplace for both buyers and sellers, because even within just the last 2 years, multiples have risen, listing prices continue to increase, year over year, and it's continuing to grow. So now is really the best time for both sides of the party to really get the best deal that they can. Yeah, so I completely agree with you on that one. Yeah, it's pretty much wraps up our call for the most part with the majority of the questions that we have. And I think this was a really awesome episode. I'm sure our listeners gained a lot of valuable insight hearing your story and kind of your background in growing these online businesses and what you've learned over the years. But what we usually like to do is wrap these calls up with a few rapid fire questions. So the first one for you, Jayrd, is why is buying an online business the right move for an entrepreneur over, say, building one from scratch?
Amazing question. I did answer all the other questions with sort of longer answers, so I will stick to the theme of rapid fire here. I wanted to make sure what I said made sense in my previous answers. But for rapid fire sense, why is it buying the right move for an entrepreneur over starting one? Well, it can take two huge resources to start an online business: time and money. We can always earn more money, but we can't earn more time. Now, I'm a strong believer in buying time and buying a business, because that buys us time and we can buy ourselves an income rather than having to wait to get that ROI in 2, 3, 5 years down the track.
Excellent answer. So this one might be tough to narrow down, but I'm sure we can make it happen. So what tools or resources can help aspiring buyers?
Podcasts, YouTube channel, due diligence checklists, courses on how to buy businesses, tools in terms of due diligence, SEMrush, Ahrefs, getting access to editors and viewers, access to all the accounts that the seller has for their particular businesses. They'd be the best resources for aspiring buyers to really understand and utilize. I didn't want to do a shameless plug there either.
No, I understand, but it's good. I mean,
so we can
obviously
cut that out if you like.
No, we'll be linking your stuff. I think you definitely fit the bill there for helping buyers in particular. We normally generally ask about like resources, but I think for this episode wanted to talk specifically about buyers. So yeah, I guess to wrap things up, what would you say has been your funniest moment working as a digital entrepreneur?
Probably a mistake. Well, it was a mistake by me very early on. Forget how long ago, but I was I think this is when I was travel blogging still. So it might have been like 2012, 2013. I had a social media marketing person with me, was putting photos up and doing a lot on Facebook and Instagram and social media for me. And they were getting paid, I think it was like at the time, 1,400 pesos, Filipino pesos. And I think I sent them like 14,000, or maybe I'd paid them for 2 weeks or double the thing. And I'd done, instead of like 2,800, I did like 28,000. And I was like, oh my God, like I was just prepared to pay in advance. And I thought, oh, well, that's funny. Like, you're in my head, I thought, all right, look, you're here for the long term, so let's just do that. But what was quite funny is that the worker that the VA was using just returned all the money straight away. And I was just like, wow. I'd been to the Philippines and met Filipino people, but I was just in disbelief of how like upfront and how beautiful Filipino people are. And that was quite a funny moment for me. It was a mistake, but I thought it was quite funny because I was like, look, you're here for the long term, and I made the mistake and, pay in advance. But yeah, they returned it straight away. I thought that was quite funny and cool.
Yeah,
wow.
That's really cool.
No, I'm super happy that worked out, obviously. And, in many different scenarios, it could have been easy for that person to have walked away.
Yeah, I was expecting a trip to Boracay at the end of this story, but I guess that...
exactly. No, that's good. I'm really happy that worked out. It's a cool story. Well, it's been great having you on, Jayrd, learning a little bit more about your journey and all your insight on buying in specific. I think this is going to be really handy for all of our aspiring buyers and current buyers. So thank you so much for coming on and sharing your wisdom today.
Thank you so much for having me. It's been an absolute pleasure, and you guys had some phenomenal questions. So thank you again.
Yeah, thank you so much.
Thank you.
Yeah, we appreciate it.
Hey everyone, now that we wrapped up the episode and learned about best buying practices, we wanted to cover some common questions about buying and selling online businesses. So, first question, what if I'm reinvesting in growth and keep profits low, but have a very high growth rate? How is that going to affect my valuation? It's a good question. So just, we would look at this on a very case-by-case basis. Everybody's business is different. Everybody's growth rate and why they're growing is different. So we would certainly keep that in mind. I guess it's worth noting, when one entrepreneur says, their business is growing for a certain reason, it's always going to be a little bit different. And they might be growing due to some kind of investments in the business. That's why they're saying, that's my profits are low, for example. So in this case, it's something that we might consider to be an add back. So an example would be, you're making $20,000 a month and you just spent, $5,000 to $6,000 on a new web design. That would be considered an add back because, that's not a typical expense to run your business, but that was something that you did as like a one-off venture to grow the business. So we could take that into consideration for your valuation, and it would not be included into your valuation as part of a normal expenditure. So that would tweak how your valuation eventually shakes out. So it's definitely worth noting those things, as you go through the year, and, maybe you're intentionally keeping profits low because you're turning tons of effort into, trying to grow the business. Just make sure to document that, keep that in mind, and, be ready to prove in what case it would be an add back versus a normal expenditure. And that way that your evaluation comes out as clean as possible and the buyers don't have any questions when it comes time to buy.
Yeah, absolutely, Sarah. It's a really good mention to bring up and something to consider as well, too, as you're going through and you're scaling your business in preparation to make an exit for it. So yeah, really great mention there. Another question that had came in that we had noticed was, what growth opportunities do buyers often look for in a potential acquisition? So this is a really great question, as a lot of first-time buyers or maybe even seasoned buyers might be wanting to discover what are some of the current trends and what are the opportunities within digital assets right now that as a buyer you should be aware of. So this will vary quite a bit depending on the buyer persona of the individual. I mean, if you're not familiar, we do have a list of buyer personas depending on why someone might acquire a digital asset depending on their business or maybe even personal goals. So really what it comes down to is, the potential for opportunities within these types of digital assets is really based on the buyer's individual skill set. So where one buyer might be very good at email marketing, another buyer might favor something with social media advertising. So really when it comes down to the opportunities, it's really individual based, and it depends on what your business goals are. So for instance, our strategic Sally buyer persona, they might acquire a business that runs in tandem with a current brand or maybe even product that they already have in their portfolio. And they see the opportunity in an acquisition for a particular business because they could piggyback that brand into their current portfolio. So really it depends on, what your specific goals are, what you're looking to acquire out of the deal, and in really honing in on your specific skill set to utilize that as an opportunity to scale the business even further. So hope that answers the question and that you were able to gain some insight in that aspect. Really determining what your end goal is with the acquisition is really where you'll gain the most opportunity when you're looking at a potential acquisition. And that pretty much wraps up this week's episode of the Opportunity Podcast. We hope you've gained some valuable insight to the opportunities that digital acquisitions offer. Click the link in the description or visit empireflippers.com/marketplace to see all of the current live listings on our market and to also determine what would be the best opportunity for you. If you enjoyed this episode, be sure to leave a comment and subscribe to the channel for more great content that is released every week. So until next time, we're your hosts. I'm Brandon.
And I'm Sarah, and thanks for tuning in to the Opportunity Podcast.